think you smashed that.
Thank
So
you.
it's almost like you're an expert. I get asked a lot about whether you should pay tax on your side hustle. What's the answer?
This series is brought to you by L&G, helping you build a future that's a little bit richer.
Hello and welcome to A Little Bit Richer with me, Iona Bain, brought to you by Legal in General. Now we're back with part 2 of our tax special with accountant Tim Paul. You can go back and have a listen to part 1 if you haven't already had a chance to do so. Definitely recommend it. But for now, let's dive in. Are you ready, Tim?
I'm ready.
Let's go. So let's talk about side hustles, because I get asked a lot about whether you should pay tax on your side hustle. What's the answer?
The answer is it depends on how much you earn.
Right.
So with this, the key thing that you want to look at is something called the trading allowance. So the trading allowance in the UK, everyone is entitled to earn up to £1,000 a year through side hustles, separate income outside of what you earn from your day-to-day salary and job. And up to this amount, you don't have to declare the income. You don't have to pay any tax on it. Obviously, when you go above the £1,000, that's where it gets a bit more interesting. At that point, you have to start declaring it. You have to register for self-assessment, and you have to do this within a certain date. So let's say you're selling clothes online or on Vinted, which a lot of people do these days, or Uber driving as a side hustle. If you earn above that £1,000, let's say the current tax year, so the tax year runs from April 25 to April 26, you would then, if you earn, say, £4,000 in that tax year through the side hustles, you've gone above the trading allowance. So what you need to do is register for self-assessment by October the 5th, 2026, and then pay the applicable tax on a self-assessment in January of 2027. That's essentially how the process works. And it will basically be added on as additional income to what your salary is. So if you earn £40,000 from your salary and you've earned £4,000 from your side hustle, you'll be paying the extra taxes if in total you've earned £44,000 for that tax year. So yeah, you'll pay the 20% income tax, the 8% national insurance on that income that you've earned from side hustles. The key thing to remember is that obviously you can deduct expenses. So any subscription fees, travel costs that you've incurred, any equipment that you've bought, stationery, even if it's really something really small like pens and notepads and books, whatever it might be that you've used to whilst doing the side hustle, you can obviously deduct that as an expense, and then you get to a figure that will be called profit, and then you pay the tax on that profit.
So keep the receipts.
Keep your receipts, people.
And if anyone's thinking, do I have to declare this really? Will the taxman get to find out about it? What's your advice?
Well, my advice is don't even think about that,
Right.
because HMRC receives data from Etsy, from Airbnb, from Uber, from all of the online platforms where people commonly earn extra income. They get all of the data. So they can see everything. They can get access to your bank account no matter what it is. If you go above the thresholds, you unfortunately have no choice but to pay the applicable tax.
Yeah, so no hiding place. You've got to come clean. But I think there has been this misperception that if you earn any money from a side hustle, then you'll have to pay tax on it. I think there were quite a lot of scary headlines about this when it was reported that HMRC would be contacting a lot of these platforms to get that data. But £1,000 is quite a lot to earn over the year, especially if you're selling clothes on Vinted or Depop, for example. A lot of us would be really lucky to get to that amount. So it's probably fair to say that it's not going to affect everyone who has a side hustle.
No, exactly not. If you're below that threshold, then you don't even have to think about it. It's just a case of tracking what you're earning, because you don't want to accidentally go above and forget to do it. So yeah, it's just make sure you're looking at your numbers and if you have to pay, you have to pay.
Exactly. Stay on top of it. Now, tax-free childcare, it can be a real help for so many families, but it can also be lost if your income goes past a certain level. Can you just talk us through how that works?
Yeah. So there's two kind of main benefits, actually. So there's tax-free childcare and there's child benefit. People kind of confuse the two. We'll go through tax-free childcare first. So that is a scheme where for every £8 you put into tax-free childcare, it's an account that you have online with the government, you then get an extra £2 back. So it's a 25% bonus, essentially. So if you put in £80, then you'll get £100 back, an additional £20. That benefit will get lost once you or your spouse is earning £100,000 or more. It's not combined, it's each. So if you both earned £99,000 each, you'd still qualify.
Ah.
So yeah, the threshold is quite high for tax-free childcare, and obviously that money that you get, the bonus, can be put towards obviously help with costs for raising your child or children. Then child benefit is a little bit more strict. So with child benefit, you get £1,300 roughly for your first child for the year, each year for your first child, and then for additional children that you have, it'd be about £900 a year that you receive from the government, again to help with childcare costs. This gets lost or starts to get lost once you hit above £60,000. Again, that's either you or your partner earns £60,000 individually. Once you go above that threshold, you start to lose the benefit or the amount of the childcare that you get by 1% for every £100. So eventually, once you hit £80,000 in income, you lose the child benefit completely. At that point, you don't get any tax-free income through child benefit from the government.
So it's worth being mindful of that, especially if you are starting to earn a decent income. Very good advice. Okay, let's do a quick fire round on some of the tax thresholds. Are you ready?
I'm ready.
Great. Personal allowance on income.
So £0 to £12,570, you don't pay any income tax or national insurance.
Personal savings allowance.
So that's for basic rate taxpayers, that is £1,000 in tax-free interest you can earn. For higher rate taxpayers, that's £500 in tax-free interest. And then for additional rate taxpayers, again, when you're earning £125,000 plus, you don't get any tax-free interest.
Interesting to know. Dividend allowance.
Yeah, so dividends, if you are a director of a limited company or if you invest in stocks that pay dividends, you can earn £500 a year tax-free from dividends and that you don't have to declare. Above that, you then have to declare.
And capital gains tax allowance.
Capital gains tax, again, if you own shares, stocks, you have to pay capital gains tax on the sale and of the gain that you make. So if you bought something for £10,000, you sold it for £20,000, you then have to pay capital gains tax on the gain of the £10,000 that you make. You get a £3,000 annual allowance. So any gains you make that are below £3,000, no tax to pay, and you can actually transfer that to a spouse to make it £6,000 in total.
I think you smashed that.
Thank
So
you.
it's almost like you're an expert. We've just mentioned a few more taxes that people might have to think about if they're saving and investing. How can we manage these to be more tax efficient?
Yeah. So the thing I talk about all the time, nearly every single piece of content I post online, it is your ISA, your individual savings allowance. If you don't know what that is, please go and research what that is. It will be your best friend from now until retiring. So what the allowance is £20,000 per tax year that you can invest and put into your ISA. There's a few different types of ISAs as well. If you want to invest, there's a stocks and shares ISA. Then if you just want kind of guaranteed interest, like a normal savings account, but tax-free, then you'd put into a cash ISA. And if you want to save towards a home, you'd put it into a lifetime ISA. They're the main ones. But it's £20,000 a year you can put into this ISA combined across all of them. And all the gains, dividends, interest is completely tax-free. It's sheltered, so the government can't touch it. They can get everything else that you earn, but they can't get the gains that you make from within your ISA. So yeah, with the benefit of something like compound interest, where you can earn interest year on year, if you start investing from a young age, then by the time you reach 60, 65 and retire, you can have a huge pot of money saved up. And again, all of it goes to you, not a penny goes to the tax man. So it's a huge lever that we've got in order to mitigate tax and actually build wealth for ourselves in this country.
And again, entirely legal.
Entirely legal.
And finally, say you own a property, you're renting out a room to help bring in a bit of extra cash. Can you talk us through what rental income tax is?
Yeah, so rental income is treated slightly differently. So there's a scheme called the rent-a-room scheme, which means that you can essentially earn up to £7,500 per year from rental income by renting out a spare room in your house. And essentially that is all tax-free. So regardless of whether, say, you've got a side hustle that you've already earned £1,000 or you've got dividends of £500, it's a separate allowance. So regardless of the other income, regardless of your salary or tax band, you get that £7,500 allowance that you can earn from renting out a room. And only once you go above that do you then have to do the self-assessment, declaring the income above that amount. But yeah, it's that's quite a good allowance that a lot of people can make use of. But obviously, only if you've got the spare room.
And what if you think that you might have underpaid tax? How would you go about declaring that?
So if you are thinking that you've underdeclared or underpaid via self-assessment, you've been earning it from a side hustle, that will be through your self-assessment. So you'll need to go online, look up your self-assessment, and make an adjustment or declare the correct amount. The best thing to do with that is to speak to an accountant, because they can obviously guide you through the process and fill out the form for you. If it's through your employment, you will always get a letter in the post if you've underpaid your tax. So that will tell you how much you've underpaid by, how much you need to pay, and it will have a link to where to go online to then pay that. So yeah, I think there's not really anything that you need to do as such. It's really only if you think that you've overpaid, then you can go online and look that up and see if you're due a rebate. But if you've underpaid, then they will make sure that they get the money that they're owed.
Yeah, and it's something that you really do need to pay attention to and not just hope will go away, because, yeah, you owe that money and it needs to be paid back.
Yes.
Got it. So before I let you go, what are your 3 quick wins for people that can help them ensure that they're not paying any more tax than they need to?
The first thing I would say is checking your tax code. So for majority of people, this should be 1257L to reflect the personal allowance. If your code on your payslip is anything other than 1257L and you don't know why, then immediately you want to contact your employer and get that sorted out. That'd be the first thing. The second thing I would say is there's a government app now. HMRC have an app, the government have an app. Download both, because what you can do is you can go on the app and you can actually put in your details, and then it can tell you what benefits and allowances you're entitled to. Childcare, the child benefits, marriage allowance, those kinds of things. So it's actually a very, very good app. And it does kind of give you all the information that you need, your national insurance contributions, how much tax you're paying, your self-assessment record, even your national insurance number, everything like that. So yeah, that would be the second thing, to see what you can get. And then the third thing is the pensions point. Get your pension sorted. If you don't know what pots you've got where, or if you don't know how much you're contributing, if you don't know how much your employer is contributing, find that out. Find out what the pension's getting invested into. Make sure that you've got that sorted, because that is the quickest win in order to make sure that you're not overpaying on your taxes.
Well, we're all singing from the same hymn sheet there. Hear, hear. That's all fantastic advice, Tim. Thank you very much.
Thank you. Thanks.
Well, we hope you now feel just a wee bit more enlightened on ways to help your finances. Thank you very much, Tim, for that. If this episode has sparked a conversation you want to have with friends or family, I would love it if you could share the podcast and help others get a little bit richer too. Next time, Laura Ann Moore will be here to show us how we can gamify our finances with lots of great hacks that might make saving, dare I say it, fun. This podcast is brought to you by L&G. You can keep up with the show on YouTube, TikTok and Instagram at Legal and General. And if you have a question or a topic that you would like answered on the show, then please do get in touch on our socials. We would absolutely love to hear from you. Until next time, see you soon.